Good morning, market movers for Thursday, September 26th. Thanks for watching. Kind of an interesting market this morning. We had a strong open, up about 100 points initially. We're up about 60 or so on the Dow right now, but a nice turnaround. S&P up about 8 points, something like that, and the Nasdaq up about 30 or so, at least off the open. So, last couple of days we've actually opened down and then rallied, only to end up fading towards the end of the day and closing down, which again happened yesterday. Today a little bit different. We opened up after 5 days of being down with the S&P, so the market is trying to kind of reverse that negative streak or stop that consecutive days down streak for the S&P, but we'll see how we close. Very early going so far. A couple news items. We had weekly jobless claims, 305,000, a little bit down from the previous week, which I think was 330,000. We had home sales, which were down 1.6% month over month, but up 2.9% year over year. So still, the trend is still up compared to a year ago, but month to month we had a pretty big dip, most likely as a result of higher mortgage rates. Which is they've actually improved a little bit from the peak. They were at a 2-year high, but they're still higher than they were because of the fear of Fed tapering. That ran rates up a bit, and also, of course, higher prices on homes, which we've seen mean, between the mortgage rates going up and the prices going up, affordability is down, and that's why we're seeing fewer sales. So we'll see. It's only 1 month. We have to watch the trend in that data, but so far so good. And then J.P. Morgan talking to the Justice Department today. Jamie Dimon, the CEO, talking to Eric Holder, the Attorney General, about a possible settlement for their mortgage abuses. Could be anywhere from $1 billion to as much as $11 billion, which is a huge number. So they're negotiating that at the moment. J.C. Penney. Citigroup analysts came out and said the stock could go as low as $1 a share because they're supposedly going to run out of money by sometime next year, and so they're scrambling around trying to find some additional capital to keep the business running and get things back on track. So that stock suffering a little bit on that news, but overall, again, we're still up about 60 points after a pretty strong open. We'll have to keep an eye on things and see where we close today, but at the moment, anyway, we're up. The other thing that's interesting is it's September, the worst performing month of the year typically, and so far it hasn't been so bad. We had that big rally after the surprise Fed decision, went to new all-time highs. We backed off from that all-time high level, obviously, since then. But for the month, the market's not doing too bad. Monday's the last day of the month, so we've got today, tomorrow, and Monday. Only 3 trading days remain, so unless the market really gets hammered today, tomorrow, and Monday, or one of the 3 days, or all the 3 days, the month's probably going to end up not being so bad. But if you look at September and October combined, that's definitely the worst time of year. A lot of bad things have happened in October in the past, lots of crashes, and obviously with the Fed only having 2 meetings left, one of which is in October, to decide whether they're going to taper or not, that could be a trigger in October that might cause a fairly substantial sell-off or even a crash in the market in the short term. So lots of things to keep an eye on, but again, so far so good on the markets anyway. The 10-year Treasury around 2.66%, hanging in there, obviously down from the 3% or so. It crested above 3% there a few weeks ago, and it's backed off a little bit, but anyway, kind of quiet on the bond side. We'll keep an eye on things.